There is a significant shift underway in the retirement savings landscape right now as President Trump is expected to sign an executive order to expand the access of alternative investments in retirement plans like 401ks. Now, alternative investments cover things like private equity, private credit, private real estate, hedge funds, cryptocurrencies, investments that are sort of non traditional or atypical of things like the stock market or the bond market. They either carry, in some cases, less liquidity or more risk associated with them. And historically, they've been reserved for institutional investors like pensions, endowments, ultra high net worth investors. And as a result of that, historically, there have been reasonably significant rates of return associated with these types of investments as compared to or relative to the public stock market or public bond market. Now, there's all sorts of pros and cons. There's a lot to unpack here. One pro is that, okay, well, retail investors, the average investor may be able to participate in more sophisticated investments that could provide either maybe less risk or more a better rate of return than what they've traditionally had access to. On the other side, there's a lot to unpack around whether these types of investments are a good fit. I think there's some reasonable degree of suspicion anytime Wall Street, which is notoriously great at creating products for them to make money on, which is their whole prerogative, is now introducing these products to the retail or average investor channels because they no longer have any capacity to grow within those institutional investor channels. They've sort of tapped out a lot of those markets. So, is this good for investors? There's a lot to consider, and I will be providing a little more content around this whole topic, hopefully in longer term video format. So keep tabs on this page for more.